If you're investing in real estate or planning to, you've probably heard someone say, or should have heard someone say, you need a holding company. But nobody ever really explains what that actually means, when it makes sense, or how to set it up without turning it into a complicated legal project. In this video, I'm going to show you what a real estate holding company structure actually looks like, why serious investors use it, how it protects you in both directions, and how to set it up, whether you're just starting out or you already own properties. And make sure you watch until the very end because I'll show you the two most common mistakes people make when setting this up. And one of them can completely wipe out the protection you think you have. Guys, this is no hype, no legal word salad, just a clear legal framework you can actually use. Let's dive in. Let me start by telling you what we did. When Dr. Haley and I bought our first multi-unit property, we knew we didn't want to just wing the legal and financial structure. We weren't thinking about one property, we were thinking about building a portfolio over time. So we set up a Wyoming holding company, and that Wyoming holding company owns multiple things: the LLCs that own each individual property, the deeds, and a separate property management LLC. Now, the property LLCs exist to hold the title and isolate risk. The property management LLC is where the business actually runs. That's where the rents come in, the expenses get paid, contractors get paid, and where the bookkeeping happens. So all of the money flows through the management company. The holding company, you guys, sits at the top and owns everything underneath. At a high level, you guys, the structure looks like this. You personally own the Wyoming holding company, and that Wyoming holding company owns a property management LLC and property LLCs. Each property LLC owns one property, and the management company manages all of them and handles all of the money. Because if you have three properties, you don't have one LLC with three properties. You have three LLCs that each own one property plus one management company. All right, so with all of these, they're owned by the holding company. Each property, you guys, lives in its own legal box, and the business operations live in a separate box. Now, why does this matter? If you own a rental property long enough, you're eventually going to deal with tenant injuries, contractor issues, or legal disputes. That's just part of the game. The real question isn't if something happens, it's how much of your life is exposed when it does. Let's say someone sues one of your properties. You guys, if that property is in its own LLC, the lawsuit stays inside that one LLC. It can't touch your other properties. It can't touch the management company, and it can't touch the holding company or your personal assets. Even in a worst case scenario where someone manages to punch through the property LLC, they still hit another layer before they even get to you personally. That's the whole point of this structure: layers and containment. This is also why separating properties matters so much. You guys, early on, we actually looked at just putting our current property and our future properties into one LLC because it seemed simpler. But once you understand how lawsuits actually work, you realize that's a terrible trade-off. If you own 5 properties in one LLC, one lawsuit puts all 5 at risk. If you own 5 properties in 5 LLCs, one lawsuit puts 1 at risk. Now let's flip the situation around. Instead of a problem happening at a property, imagine you get sued personally for something unrelated to real estate. This is another reason why we like having the Wyoming holding company at the top. If you personally own all of your property LLCs and your management company, a creditor can go after all of those interests. Quick side note, if you're listening to this and thinking, I get the concept, but I'm not totally sure how this should look for my specific situation, I put a link in the description where you can book a free call with us, and we're happy to talk it through and help you think about what structure actually makes sense for you. No pressure, just guidance. Now back to it. Another benefit we didn't fully appreciate at first is privacy, and honestly, this one becomes more important the more properties you own. In many states, LLC ownership is public. That means if a tenant, a contractor, or an attorney decides to look up who owns the property, they can often very quickly find your name and your home address. And once people know who you are and where you live, a few things can happen. Sometimes tenants start trying to contact you directly instead of going through proper channels. Sometimes people show up at your house. Sometimes lawyers start sending demand letters straight to you personally instead of the company. And even when nothing dramatic happens, it just creates unnecessary stress and exposure. You guys, with the Wyoming holding company, your name doesn't show up in public records. Wyoming is an anonymous state. So when somebody looks up the owner of a property, what they see is the property LLC is owned by your Wyoming LLC, and that's the end of the trail. They never see you. They don't know who you are. They don't know where you live. They don't know what else you own. Everything stays professional and everything stays at the company level, exactly how it should be. For us, this was absolutely essential because it keeps a clean boundary between our personal lives and our real estate business. Now, from a tax perspective, this structure usually doesn't change how much tax you pay, but it does clean up your ownership, centralize your finances through the management company, simplify bookkeeping, and make scaling much easier. All the money flows through the operating company instead of being scattered everywhere. Now, the real downside to this structure, you guys, is just cost and admin. The more LLCs you have, it means more filings and small annual fees. In Wyoming, the annual fee is about $60 to maintain that LLC. Now, for us, that feels like very cheap insurance. Now, let me come back to what I mentioned at the beginning, the two mistakes that break most people's setups. I bet you already know them. The first big mistake is putting multiple properties into one LLC. People buy 3, 5, sometimes 10 properties and they stick them all into one company. One lawsuit at one property now puts everything at risk. The second big mistake is owning all the LLCs directly in your name. Even if you have separate property LLCs, if you personally own them and you get sued personally, a creditor can go after your entire portfolio and your management company. The holding company exists to put a legal firewall between you and the entire operation. So, how do you actually set this up? If you're starting from scratch, this is essentially what we did. 1, form your Wyoming holding company. 2, form a property management LLC. And then for each property, form a 3 separate property LLC in the state where the property is located. Make the holding company the owner of all of them, and the management company runs the business. The property LLCs hold the assets. If you already own a property in an LLC, you don't have to unwind everything. You create the holding company, then contribute your existing LLC interest into it so the holding company becomes the owner. You could also add the management company going forward. This is something you'll want to do carefully with your CPA or attorney, but structurally, you guys, it's very straightforward. Now, a quick disclaimer, this isn't legal or tax advice. Every state and every situation is different, so always confirm your setup with your CPA and your attorney. Team, if you're serious about building a real estate portfolio, this kind of structure isn't fancy, it's foundational. And if you want help thinking through this for your own situation, there's a link in the description where you can book a free call with us. We'll walk you through what you're planning to buy and what structure actually makes sense for you. And if you decide you want this done for you, we also recommend an amazing company that we personally use and trust. They can set up the Wyoming holding company, the management company, and the property LLCs for you, all for a very fair price, without you having to deal with the paperwork, the stress, or the headaches. If this was helpful, hit the like button, drop any questions in the comments, and if you want more real estate investing content for working professionals, 9 to 5ers, make sure you click subscribe. That's it for today, team. I'll see you in the next one.